There are two ways that you can invest your money in the stock market. I like to call this a passive method and an active method. Passive is where you're just going to throw your money into the markets. So there are funds, ETFs, mutual funds, index funds. What this means is these are baskets of companies, these are groups of companies. So instead of investing in, say, the Amazon stock, you're investing in a group of maybe 500 of the largest companies in the stock market, and Amazon is one of them. This way now you don't have to worry about analyzing the perfect company and picking the perfect stock. You're just going to throw your money into a fund. This is what I call passive investing, and the way that you succeed as a passive investor is you got to CPA. You got to be consistent, you got to be passive, and you got to be automatic with this. What this means is you want to pick a cadence, whether it's every week or every 2 weeks or every month. And then you just put your money into these funds and you let the markets do their thing. So I do this and I do this. For me, my CPA strategy is every Wednesday. I picked Wednesday because it's in the middle of the week. There's no science to this, but every Wednesday, money is pulled out of my checkings account and is automatically invested into my portfolio of funds. Now, I have funds that give me exposure to a lot of different things, some to the general stock market, some to dividends, and some to a little bit more innovation. But this is where my money is being automatically invested. And you just got to figure out what types of funds you want to invest in, because there are funds for pretty much everything. For example, there is an ETF, and I'm not telling you what to invest in. I got to remind you as well, investing has risks. You are never guaranteed to make money when you invest. In fact, you will lose money at some point. So make sure you always do your own due diligence and never blindly trust a random guy on YouTube. There's an ETF out there called VTI. This is created by an institution called Vanguard, and this gives you exposure to the total stock market. So if you just want to buy the American stock market, VTI gives you exposure to the total stock market. Another example, SPY. This is an ETF that gives you exposure to the S&P 500, which is a group of the 500 largest companies in the stock market. So if you just want to invest in the 500 largest companies in America that are trading on the stock market, SPY. You can create a system that invests into this, and what we've seen is that over the long term, markets go up, markets go down, market crashes happen, recessions happen, market booms happen, but over the long term, markets have generally gone up. And this is where you just got a CPA through the ups, the downs, and the sideways consistently, even through the tough times, and that's where the wealth is built. Active investing is a little bit different. This is where you're going to put aside some money, and then you're going to actively find a good investment. Now, when I say active, I don't mean trading, I mean looking for a good investment. This would be now you're looking for either a fund or a stock to invest in that's a little bit more niche. Maybe you're looking for a new market shift, you're looking for an opportunity, you're looking for something to invest in, but now you got to study the financials. You got to do the research, and you got to put in the time to make sure that this is the investment that you want to be involved in, but it's not automatic. You have to go and deploy this money if you see a good opportunity. Again, you don't have to pick one. I do both of these, but you got to find the right strategy for you. The fifth way that you can invest that $100 is into passive real estate. So just like with the stock market, you can invest in real estate actively or passively. And I specifically said for this example, talking about passive real estate, because active real estate requires more work and more money. Active real estate investing is when you go out and you buy a property. It could be a single family house, it could be an apartment complex, an office building, a manufacturing building, whatever it is. You're going to go out and buy this property and then lease it to a person, a family, a business, whatever, and they're going to pay you rent for using your property. That is active real estate investing, and that's going to cost you more money. You might have heard people talk about no money down real estate. Does it exist? Absolutely, but I'm going to tell you the reality about no money down real estate. No money down real estate has made me a lot of money because people will go into no money down real estate thinking that it's so easy. I can buy properties with no money, no credit, no experience, and then people get in way over their heads. They take on way too much debt. They don't know how to manage the property. The banks force you now to sell that property at a huge loss to somebody like me. So yes, no money down real estate has made me a lot of money because people who do it, who don't know what they're doing, have to sell those properties at a huge discount. Which is why I am not an advocate for you to do no money down real estate. I'd rather you, if you're just getting started and you only have $100, to consider more passive real estate. Once you have more money and you want to be more involved, go out and be an active real estate investor. It is a great opportunity, but it takes more work and more money, okay? So now when we talk about passive real estate, this is where now you can use a crowdfunding service, or you can be involved in syndicate real estate deals where you find somebody else who is doing the deals and you are going to give them some money. And yes, you could do this with as little as $10, $100. Sometimes they're going to want more money, but it just depends on the deal. It depends on the operation. You could go to a real estate investor conference in your area. They happen all over the country. and the world, and you can meet investors that need money, because there's always going to be investors and developers that need money for a deal. You can fund them directly, or you can use different services online. There are crowdfunding services online that you can invest into, that you will get exposure to these deals, and now you don't have to worry about dealing with tenants. You don't have to worry about unclogging toilets. You don't have to worry about dealing with the city or property managers. You just invest your money, and then you can see your returns on your portal. Again, is there risk involved? Absolutely, because you're investing in real estate. Real estate goes up and down, and there's issues that are involved, but you don't have to worry about being active when you are a passive investor, and you can start investing with much less money. So if you want to get exposure to real estate, that's something that you can consider. And if you're wondering where you can do that, again, you can check out some of our advertisers that help you with this type of crowdfunded real estate down in the description. The sixth way that you can invest that $100 is into speculative assets. These are things like cryptocurrencies, startups, trading cards. These speculative assets are the exciting part of the investing world. This is what some people assume investing should be like, that it should be so exciting and energizing and crazy. Markets go up and markets crash all the time. But the reality is, and I'm going to say this, and I'm going to sound like a really old person, your speculative assets should be part of the speculative piece of your portfolio. Okay? And what that means is, if you're just getting started, probably less than 10% of your total investments should be speculative. Maybe as you build more wealth and you build a more foundation of your other investments, now you can kind of push it up closer to that 20%, but that's kind of it. Because your speculative investments can go up very quickly, but they can crash just as fast. So for me, I don't want to take on all that risk. Yeah, I get it, it's fun. And I invest in some startups, and I invest in some cryptocurrencies, and I know that they can go up just as fast, and I know they can fall just as fast. But for me, I know that this is speculative, so I keep it as a smaller piece of my portfolio, because I know that stocks and real estate have been proven through the test of time, and so those are the bulk of my investments. The speculative investments are treated like speculative investments in my portfolio. The reason why I say this is because I've met a lot of people, especially younger people, that are struggling with money. You're living paycheck to paycheck. Life is hard. Inflation is hard. I get it. And now you want to get started with investing, and you start to hear about how stocks and real estate, they can give you 7-10% returns a year over the long term. But it doesn't sound that good, because if you invest $100, that's a $7 return or a $10 return after 1 year. And so now you start to look for something a little bit more exciting, with a little bit more upside. Some people turn to sports betting and other sorts of gambling. Some people turn to things like crypto or meme stocks or other types of speculative investments, hoping that they can double their money quickly. Can it work? Absolutely. But now you're taking on a lot of risk. And if you're really trying to build wealth, your wealth is going to be much more sustained through things that have been proven. Now, I'm not saying don't have any speculative investments, just understand what is speculative, what's not. That way you can weather the storms when they go up and down, because the reality is markets go up and markets go down. We've seen this happen decade after decade after decade. And when you're talking about speculative assets, well, those go up even faster and they can fall even faster. And if you can't withstand the psychology, then you're going to be stuck in a lot of pain. And then option number 7 is to invest this $100 into your own business. My largest investment is my business, Briefs Media. Briefs Media spun out as a byproduct of Minority Mindset. I started Minority Mindset with less than $500. And I say $500 as a kind of a big cushion, because when I started Minority Mindset, I didn't have a camera, I didn't have any fancy editing software, I didn't have a fancy mic. All I had was a $25 or $35 tripod that I bought off of Amazon. I recorded the videos off of my phone, and then I think I bought a $25 or $35 light. I don't remember what my other expenses were, but I'm just gonna round it up to $500, but I started off like that. Eventually, this brand started to grow, started to make some more money, which then started to build Briefs Media, and that started to grow, and now we have a beautiful office in downtown Detroit. We have a team of market analysts and employees that are working every single day, and it all started with a small investment. But a lot of time, a lot of headache, a lot of work, and a lot of stress, and you gotta be willing to go through the ups and downs. But if you're willing to do that, if you're willing to learn, if you're willing to apply things, watch YouTube videos, read books, take classes, and reinvest the money that you make, you can start to see more larger returns. I mean, there's no investment that can give you a better return than your business, but it's risky. I mean, most businesses fail. They say 90% of businesses fail within the first 5 years. But maybe that means you got to start 5 businesses to really figure out what it takes. And this is where, if you are an entrepreneur, this can create a great opportunity for you if you're willing to go through that process. It's not for everybody. I'm not saying everybody needs to start a business, and most people shouldn't start a business. You don't need a business to build wealth, but it is an option. If that's something that has been on your mind, is something that you want to do, you can start a business and use your money to invest as seed capital into your own business. And maybe it'll work, but at the very least, you're gonna learn something. If you enjoyed this clip and you wanna continue your financial education journey, I have another video that I think you'll love. All you gotta do is click that button right over there. And for those of you who wanna stay up to date on the top finance and business news, you can join Market Briefs, my free financial newsletter, by clicking that button below. Thank you for watching, and I'll see you in the next one.